good morning. It's the 14th of April. Let's check out what's been happening at Asset Class this week. Well, it's been a busy week here in New York. We had the opportunity of attending 2 days associated with DocuSign, a major partner of ours. First of all, on Tuesday of last week, the Partner Day. Really great day. I had the opportunity of sitting down with Alan Tegeson, who's the CEO of DocuSign, sharing more our strategy on the partnership that we have. We've got very deep integration with DocuSign. It's a core part of our fundamental end-to-end proposition. And so great to spend some time with Alan and the broader partner team and the product team to share more of our plans for this coming year, and thankfully to ensure that we are very much aligned around the types of solutions that our joint clients are looking for. So delighted to be able to share that. Also had the opportunity on the second day at Momentum, which is their annual user conference here in New York, to first of all see the new DocuSign brand unveiled. I think it's been incredibly well thought out, and supporting their new positioning, which is focused on Intelligent Agreement Management, or IAM for short. So some really exciting developments around that, focusing on everything from AI application to the I guess the leveraging or unlocking, as they would refer to it, is the information that's available within these agreements to make it more usable for companies, to make the creation process, the commitment process, and the signing process a great deal easier end to end. So really exciting stuff there from DocuSign. Delighted to have them as a partner and really enjoyed both events. At a more macro level this week, had the opportunity to read Jamie Dimon's annual letter, Jamie of JP Morgan. And yeah, some interesting stats. There's a lot of detail there. I'll actually put a link to it in the comments below. A lot of detail, well worth a read. It is a long read, but if you're grabbing a coffee here on Sunday, sit down, have a read of it. It's a really nice synopsis of actually the global macro situation relative to not just JP Morgan Chase's business, but the broader financial markets. There's a couple of stats that really jumped out at me. First of all, the picture for JP Morgan was very positive this year. The most significant stat that jumped out for me was their growth in their wealth and private wealth division. So over 20% growth in that division, with $490 billion, almost $500 billion in net inflows coming into that division. And what was more striking, or I guess equally as striking, was the comments he made regarding the shrinking private markets. And really interesting stat there. If we look at the public companies in existence over the last 20 years, well, actually going back just under 20 years, 1996 to today, the number of public companies has shrunk from 7,300 public companies to 4,300 public companies today. Lots of reasons for that, which he goes into in the document, not the least of which is the increasing governance. Certainly right now, not a particularly great time to be going public, although the markets are warming. Now, on the contrary, the private markets have grown super significantly over that time. So if you look at over the same period, roughly the same period, the last 20 years, the number of private companies backed by private equity and family offices has grown from 1,900 to over 11,200. So really a tale of incredible differences there between the public and private markets. Yet another reason why the private markets are, I believe, enjoying such tremendous growth, and we're certainly seeing the shoots of that recovery here at Asset Class. So yeah, great report. Recommend you check it out, and as I say, there's a link in the comments. And speaking of the macro level picture, we saw not great news on the inflation rates for March, higher than expected. Quite a hot environment here at 3.5% inflation rates in March, well above the consensus estimates. So that is going to keep interest rates high. It's probably going to push out the expected rate cut that many were expecting in June to possibly September. We'll have to wait and see on that, but yeah, not great news there. Good news for the economy, of course, with tremendous job rate numbers published also, but that inflation rate definitely causing some challenges, will be causing some challenges for private markets. Probably good news for the credit funds that are out there as rates get pushed up and stay high, but for the broader market, that's going to be a little bit more challenging, and we'll watch that one with interest. But yeah, the inflationary pressures continue. And then finally, as we wrap up the week here, this was FinTech Week in New York this past week, so had the opportunity to attend lots of events, speak to a lot of people in the venture capital and private equity community. Wanted to just have a shout out to our friends at Canopy Ventures, TTV Capital, and Live Oak Ventures, Live Oak Bank, for their support. Attended a great event called FinTech and Friends with them this week. Really a great networking opportunity, an opportunity to get some feedback from fellow founders, talk to people in the broader private capital space. It's a great event, and thanks to everybody who participated in FinTech Week this week in New York. As always, a tremendous success, a great opportunity to get a sense of what's happening in the market, and I have to say, very vibrant and very positive outlook from the market in general, which is great compared to the same events this time last year. There was a lot of trepidation, uncertainty that seems to be dissipating here as we come into the second quarter of 24. So yeah, thanks again to everybody. Hope you guys had a great week wherever you are. Whatever you're doing, enjoy the week ahead, and we'll talk to you soon. Take care.